Okay, welcome everyone to this live intraday scalp webinar on SB Trade Desk. Quick disclaimer, we are just getting the release of non-farm productivity and initial jobless claims coming in 278,000 versus 290, a little bit better than expected there. Trade balance, 46.6 deficit billion versus a 38.0 billion expected, so a little bit worse on the trade deficit for the United States. Guys, great to be with you here today. I do want to take a moment to apologize about yesterday's session. I was not able to attend. Just for information for you guys, occasionally I do suffer from chronic cluster headache attacks, which is a debilitating condition. So sometimes I'll be out of the game for a while, but back today, full with all cylinders pumping. So good to be back with you guys. So a lot of stuff going on in the market over the last couple of days. I gave you an update last night on Twitter and on the intraday page for the setups that are still in play. Obviously tomorrow as we head into the data, guys, all eyes are going to go right to the dollar crosses. NFPs are on tap. We're looking for a print, an expected print for tomorrow, looking for 230,000 on non-farm payrolls. Unemployment expected to hold at 5.6%. Private payrolls 225 versus 240, which is what we got last month. So we are going to bring you live coverage of that tomorrow morning, guys. We're going to bring on just the webinar at 8:30 to get that release. So we'll start by 8:15. We'll go through that print together and see what kind of market reaction we get right off the release. So as we go through, we're going to go through yesterday's setups real quick. If you guys have any questions on anything that any of the pairs that we're covering, or if you have any questions on any pairs that you are covering, strategy questions, do feel free to post them on the message board. Okay, just scanning the wires here to see if anything else of merit comes up. Okay. Eileen, yes, I'm watching British Pound too, so before we even move on, I just want to show you this. I tweeted this chart last night as well on SB. Here's the intraday sort of structure that we've been traveling in. Really clean, guys, really clean. And the tweet yesterday, we were trading right around here. We were just making the breakout of the Asia Pac opening range high. The Asia Pac opening range last night, guys, actually offered a lot of different opportunities. I tried to highlight as many as I could. The Kiwi Yen is still in the Asia Pac opening range. That never actually broke. Okay. Oh, it wasn't Kiwi Yen. It was dollar yen. Which one was I looking at? I'm sorry, guys. Give me one moment. Oh, Zero Oz. Sorry about that. Here it is. Okay, so the Euro Oz actual opening range for Asia Pac never got cleared. You did a quick spike low there, but that was on divergence as it stands in momentum. So you're not going to take a position like that on the rally coming right into the Asia Pac opening range high, and we're still focused on this range. So even as we head into US, guys, when the opening ranges for each of the sessions start to coincide and you have multiple sessions respecting that opening range, the break becomes even more operative. So we're looking for either a break above 46.47, you look for recovery back above 47, or you look for that break sub 46.15. I'm sorry, the break sub 45.65, the lows for Asia, and that would bring you down to targets. Obviously, initially the opening range low, but you'd essentially be looking for the lower median line parallel of this formation. So you do have a lot of those in play, but I agree with you. The pound has been very impressive. We'll take a look at the pound CAD later in the session here as well. I'll give you an update that last night. Don't know why my charts don't want to transfer, but okay. So one thing I just wanted to point out with the pound dollar and where we are right now, obviously you're looking for the upper median line parallel, which is coming up here momentarily, but also a long-standing basic trendline resistance from that September high. Okay, you saw a couple of probes through it here back in December, missed it on that last stretch here to end the year on the 31st, and that level comes right in, coincides dead on, okay, with the upper median line parallel right around here around 53.20, okay. So we'll be looking for resistance up there near term. For those of you who are looking to enter new positions on the pound, that actually might be a nice area to start looking lower. Now, we did get the BOE interest rate decision this morning, yada, yada. Nothing new on that front, right? So the focus is going to continue to be on this region right here for the pound. And it looks like we might have some momentum triggers here we'll want to pay attention to. And again, as we head into that region, it's always prudent, guys, to just go ahead and bring up a 5-minute chart. Let's see what the intraday triggers look like. One trigger. That's 2 triggers. And of course, on a trade like that, you know, the break and turnaround sub 70 and the break sub 70 in and of itself can be offered as a trigger as well. Now, if we break through this, guys, and Eileen, if we break through this, there is a lot of room to the upside. 53.85 would be the next upside target I would be looking at. That actually coincides with the 50-day moving average here as you head right into that 50, just shy of 54. More importantly, on a harder stretch to the upside, guys, you have a very, very key level at 54.80, basically. A basic 236 from the decline off the July high, but that's not the main thing. You also have that swing low that you made for December. And obviously, this is going to be the December low. Okay, December low day close comes in right around 55. Okay, so the levels here are pretty clean. Obviously, if you get the 50 break in momentum on a daily close basis, remember this is only based on the close price. That would further validate a more aggressive upside approach here for the pound. That being said, I'd be weary into this region right here, near term. All right, if we blast through that, we're going to maintain that upside bias. As it stands objectively, remember that the weekly opening range clearly broke to the upside right here. Here's your Sunday, Monday, you make a high, you test a new low, you press that high, it breaks. The Asia Pac opening range high broke to the upside as well. So as it stands, this is the way we always scalp, guys. When we're in the trade, we're in that directional bias until there's something to take us out. Okay, so even if this resistance level holds, yeah, on a really nimble short scalp, I hear you. But you got to keep in mind that the weekly bias will remain intact unless something invalidates that. At this point, the bullish invalidation level is going to be sitting with this median line here. Objectively, you would want that bullish invalidation to be below the Asia Pac opening range low. But, you know, with the kind of stretch that we've seen here in this break here, if we do break below the buy sector, that would invalidate the near-term upside bias. Is this, Fernando says, is this an inverse head and shoulders break? It could be. You're not the first person to suggest that. So if it is, this would be sort of the neckline you'd be working with. It depends how you're drawing your head and shoulders. This would be the neckline I'd be working with, left shoulder, middle, right shoulder, break. It gives you a measured objective move of I'd probably be using this measured move here. Sorry about this guy. A little bit of a lag here on the PC. Okay, this would give you actually a measured move into right around 154.77, 154.80. Okay, if it's a head and shoulders break. And really the only benefit you give guys from being able to identify them is they give you those measured moves, right? So depending on how you draw your neckline, yeah, 100% off this would probably get you somewhere in that 54.60 range, which is actually a 618 off the high. It'd be a very, very nice area for us to cap out. Near term, though, you don't want to ignore that. And that's the one thing I just want to put out there, guys. When it comes to intraday trading, right? Yeah, cool. Okay, head and shoulders break. It seems great. You have directional bias, but still, the most important thing is the entry. Always. The best risk management is a proper entry, in my humble opinion. So with that said, you know, just because the break happened, just because we are looking for a possible stretch into 54, doesn't mean I could just hold doesn't mean that these levels are just going to sail through. We have plenty of opportunity here. If this holds as resistance, you get a kickback, this thing could come right back into the buy sector. That'll offer you another long position, right? So I hear you. It could be a possible head and shoulders break for sure. I don't really like to stress those formations too often because I think if you look hard enough, you'll see a head and shoulders formation every single time frame, every single day. So while certainly it is important, if you can identify it, it can be a great help. So keep that in mind and watch this region right here at 53.20 as possible resistance. A stretch higher will take you to 53.68, and that would be a 50% retracement from the decline off the highs that you made for December. Really nice setup. I don't have this highlighted on the page, but I did tweet it last night. He says, okay, thanks for the rain, and anytime, Eileen. One other question, guys. Just wanted to review with you. I know I got some feedback from you guys at the last webinar. Have you guys found these charts useful? So I know there was a lot of questions with regards to zooming out on the 30 minutes so that you can get a better view of what the broader picture looks like. Did you guys find that those scaled out charts are more helpful? If they are, just give me a quick yes, and I'll continue to do that for you for sure. One other thing I do want to note is kind of a preference question from you guys. Would you rather keep the current layout that we have, or did you want it so that every single post each day is a separate post? I tried to keep it all on one page so that you can go back and quickly review what the previous day's notes were. But if there is a request to keep each day's log separate, you know, we can take that route as well. Again, your feedback, guys, is invaluable, okay? It's just that if you want to go to the previous day's statement, you're going to have to review the previous day's log. It won't all be kind of stacked up here. So I thought that the being able to look at the chart and kind of walk through the process would be a little bit stronger. The only downside to that strategy is that you can't see the previous day's charts, which is what kind of concerned me. But if you guys are cool with that, then you know we'll take that approach for sure. So your feedback is going to be invaluable as we get ready for final watch. I like today's stuff only before. I'd like today's stuff only below the chart. Prefer stacking it, in my humble opinion. Jay says one page works for me, easier to see through the process, and most important thing, one page is good. I like the current layout. All right, so it looks like the majority here of you kind of like the current layout. One page is good from Stefan. So Premenjai, or who was that? Stefan, I hear you, which is why when you look at it, the first post is always going to be the most recent, and the chart you're looking at is always going to be the most recent. So looks like everyone here is kind of happy with what we got. Let me know, and I appreciate your feedback as always, guys. We take all your chats, and it's all archived, so we'll be able to see every one of your comments. No worries. Okay, so that's the pound. I guess we should just kind of take a parallel into the pound crosses. So on the intraday chart, the pound CAD has been so absurdly ridiculous as far as, as far as the ranges. Jeez. So we started off the week in this nice channel formation. The opening range for the week was really tight for Asia Pac. The Asia Pac opening range broke as you head into the U.S. trade session. That took you outside of this formation. First targets were at 190. Second targets were at 188.65. Third was at 187.96. You have a nice median line there, former median line resistance. And then in the trigger break here, divergence into the lows, followed by trigger break. I was writing this the day before, not yesterday, guys, notes, but the day before. If you realize on the second, I was saying that there is, building divergence into the lows here, but we hadn't gotten the trigger break yet. On a trade like this, if you notice, this was actually the best entry you could have gotten. Okay, the best entry you could have gotten, but there was no signal in momentum. And in fact, you had another divergence signal as this thing pressed sideways. The break here forwent, I guess you could say, some of this range, but you had a much more strong conviction on a long against that region. So what I'm trying to say to you is it pays, guys. It pays to wait for the triggers to give out. It pays to wait to get a little bit more of a conviction trigger, and also it gives you a little bit more of an objective stop to trade against. So when we're looking at the pound CAD here, first of all, before we even jump into the live chart, the daily, I mean, talk about wicked. Talk about wicked, right? Here's what the pound CAD looks like on the day. Huge ranges, just massive. So for the opening range of the month already, you're looking at a massive, massive range. The daily ATR has now climbed to 230 pips, something to keep in mind for sure. Sorry about that. Okay, and basically what we did as we headed out the week, as we started the week, we were holding just below this resistance, waiting for that channel to break. It broke. Look where the pullback found support, guys. The former upper median line parallel, and that's on the scalp chart, and the current median line off the lows from December. Okay, now sometimes you need to tweak these just a little bit to match price action. That's okay. But certainly there was a risk down here while below 88.64, and here's the pop. So at this juncture, guys, now we've gotten the BOE cleared out of the way. I was really hesitant on doing anything on this ahead of the BOE. Now that we've cleared out of the way, here's what the intraday chart looks like. To be quite frank with you, I'm not really keen on getting any or taking any firm stance on this. If there is an opening range break that is compelling, certainly the range is there. You have 58 pips as your profit targets per scalp on a quarter of the daily ATR. I think you could get another low before this thing turns around. So I'm a little concerned about trying to play the long side. Remember, the broader trade, in my humble opinion, still you've got plenty of upside. Okay, this was a break of a trendline resistance that dated back to last year. Okay, it had quite a stretch. This is still major key resistance, which is why in yesterday's notes I said longs below this region are still at risk. But if you get a pullback back into this zone, if you get a pullback back into 190, that'd be the first area to start to look for possible long exposure again. I just think this one's kind of worn out. You want to let this thing settle. You probably get a little bit more consolidation before the inevitable breakout to the upside. So we're going to move this tonight to the watch list, barring some sort of major event risk today or break today to the upside while we're in this range. If you want to scalp it, play the range. It's very, very healthy. Like I said, 58 pips, 55 pips per scalp should suffice. But for me, the directional bias at this point becomes a little bit more hairy after a stretched move like that. Questions on Sterling CAD? Okay, so here's that quick indicator, guys, that trade session indicator that tells you the session highs and lows. You can find this on fxcmapps.com if you're interested. Just highlights each session for you, right? So just wanted to show you for this pair, since last night, the opening ranges have been absurd. So here's your Sydney opening range in light blue, sky blue here. I don't know if you guys can see it. That gives you a high of 91 and a low basically of 90.55. Tokyo range, identical. Identical. London in green. I'm not really going to stress this one stretch here, guys, okay? That's going to be the BOE interest rate decision. You get these spike highs. Not going to stretch it. On the body for the candle, you're still looking at the same range. So what I want to note is this. You have the Sydney, Tokyo, London, and New York opening ranges all straddling 191 into 190.50. Okay, so a break of that is likely going to give you a play. When's the last time we saw something to that degree? Well, it wasn't too far off. It was back here on the 3rd. Okay, you had the Sydney, Tokyo, and the start of London, all opening range below 88.60 into 87. Well, let's just call it the 88 handle, right? Those three sessions all had an opening range that overlapped. When you got that break, you got a major run. You got a major run. Before that, here, even on the 2nd of the week, or 2nd of the month, Sydney, Tokyo, also giving you a very clean opening range. When that broke to the downside, you got an extended play. Not as big, but obviously you're heading into that support barrier. So the focus now as you head into the U.S. session is going to be on this range. Okay, and once that range gives out, a downside break, tack on a quick retracement to play those targets. I'm not going to stress the 236 anymore because we've been straddling that. Okay, an upside break above this. Don't forget about this 191.50, 192 region on the daily chart, it really is a critical area. Okay, it really is a critical area right here. So I think the setup is still clean. I just don't think we have a directional bias here for U.S. trade unless we clear that opening range for those last 3 sessions. Guys, does that help? Give you a quick picture of what I'm looking at. So when we put a neutral bias on the scalp page, doesn't mean that there's no play there. It just means that we're really waiting on something to happen near term to validate our directional bias. Okay. Sandeep saying, what about Aussie dollar? Just broke 78. Brian says, cool. Right on, Brian. Sandeep, let's take a look at Aussie dollar. Yeah, so guys, what do you see going on here, Sandeep? For me, a trade like this, which is so stretched on the daily, I know that Jamie's looking at some interesting stuff here. For me, I don't really have a play on it from a near-term scalp setup. Okay, the opening range for the week, largely, guys, is intact. Okay, here's your Monday, Tuesday range. So from a weekly standpoint, I don't even have a bias. Where remember, on the sterling dollar, right, that weekly bias cleared out real quick on Wednesday, or Tuesday, was it? Once we broke that Asia Pac high, now we're looking higher into the end of the week for a Thursday, Friday high, which is why I'm kind of concerned here. I think you find some possible nice resistance here to offer some shorts. But the Aussie dollar has not. Okay, in fact, we're still sitting right basically where we opened the month, or where we opened the week, 78.80. Okay, so for me, there's not necessarily a play here. It would be a break above 78.50 that has me looking for the correction play. Which is why on Daily FX, on SB, you haven't really seen me get too involved on the Aussie. I think you have better chances on the Aussie crosses. In fact, Euro Aussie has been a beautiful play so far. There's no bias as well. I'll be looking higher probably at 79.50 region to play a short. I'd be cautious, you know, even if you get into 79.50. Oh, I'm sorry, you said 79.50. Yeah. I thought you said 78.50 because that's just the opening range high. So if it gets through that, you're likely to see 79.50. Sandeep, I do think 78.950 is a better region. You have the median line there off the highs from the October 2013. You have that 2618 off the high from October. The 618. This is from the retracement of the advance off the lows they made in 2008. You have a longer dated 50% retracement. This is from the advance off the 2001. Yeah, 2001 low. Okay. And obviously a major pivot in price. You can see all the way back to the early 2000s. So I agree with you. 79.50 would be an area I'd start to look for shorts. Doesn't necessarily mean we're just going to blindly sell there. We need some triggers, but an area of resistance I would definitely be interested in looking at. Eileen, I'm not sure what you mean by that question, but it seems like a good question. She says, when you're stacking triggers, what gives you the clue that the move will also have follow through? So Eileen, is there an example that you can walk me through of something that I might have posted that has you confused? I'm not sure what you mean by stacking triggers. I see your question here, Stefan. Let me know if you're still in the room here, Stefan, about Euro Yen. We'll take a look. Eileen says, not really, but in general, I see your triggers all day that then are false. You see triggers all day that don't pan out, you're saying basically, right? So here's the thing, guys. Let me take you through one of the setups that we've been talking about. So we went over sterling CAD, didn't go over dollar yen. Let's go over the Euro Oz. So one thing to keep in mind, Aline, I know I've said this to you before, it's important to note, okay, so it looks like, by the way, you're going to see the opening range break to the upside, in which case we should be targeting 47 on this stretch here, guys, back into this region at that 1618. So we have to see this thing pop through 46.50. Let's see if it gets it. I think on the back of this break here, it likely does see that topside move. But in any event, triggers like this, I'm not really sure what you mean by follow through. You don't ever know if there's going to be follow through, Eileen. That's why we use stops. But it's important to note when the trigger break is happening. So if you're seeing triggers that don't actually pan out, so I'll show you an example right here. This is a trigger you might have been looking at. And hey, topside break here. Oh man, let's get on the long side of the trade. You take the trade, the momentum signature comes back, tests that same resistance as support, and you find more level, but the trade keeps coming against you. Now, this is probably not the best example because it actually did break to the upside inevitably, but a trade like this, you need to be mindful of when the trigger is happening, Eileen. If the triggers aren't prompting action in price, it's typically because you're looking at it at an odd time. So the break here actually happened right heading into the open of Asia Pac on Monday. And again, a trigger in of itself, Eileen, with no break in price is not operative, right? Is not operative. So there's two things I would say. If you're finding that triggers are kind of stale or they're not giving you the movement in price, there's two things I would look at. There's only two possible possibilities of things that are going wrong. A, the time of day that the trigger is happening, or B, is price action also validating a break of a resistance level, a support level, an opening range high, a trend line, a fib level, right? And if those two things aren't happening in congruence, then Eileen is probably not going to be an operative trigger. Like I said, guys, these are just here for help. That's all it is. It's a graphical representation of shift in momentum. There's nothing magical about this. All oscillators are backwards looking. They're not forwards looking. We're just looking for this to give us a little bit more conviction on what we're seeing in price. So Eileen, the first thing I would say is your focus shouldn't be on the oscillator. Your focus should always be on price. And when you see something in price that looks interesting, then we take a look down here and see if we can get a triggered oscillator to also confirm it. It shouldn't be the other way around. We shouldn't be looking for a trigger and then seeing if price is doing something. It's the exact opposite. Nothing supersedes price action. Eileen, does that help? She says, okay, timing for sure, even before / after tops or top of hours, and of course the sessions. Right. I wouldn't really necessarily like front running the open of a new session, but certainly the opening ranges for the session, the opening ranges for the hour. You're not going to see me jump into a price, into a trade at like 345 or something like that, right? So, you know, some food for thought there. Eileen says, and price action, yes, that helps. Right on. Keep your questions coming, guys. I'm sure there's other people in the room who have a similar question to what you're looking at. Any ideas on to play NFP in both cases, a miss and a beat? Fernando, before we wrap up the session, my man, we're definitely going to go over that. Like I said, we'll be live tomorrow morning. I'm going to open up the room here just to give you guys live coverage on that as well. But Euro Oz, okay, so the focus here, as I noted in yesterday's piece, is still going to be on a break of the opening range. If you guys remember, the day before, we were trading right ahead of 47.15. We had this region highlighted here in time. It's just awesome when you see the price actually come into those regions you highlight, but you had the median line parallel, you had the opening range high for the week, okay, and it was sort of a good cushy spot for this thing to find some support. Now, we actually drilled right below it. This, to me, is a defense of the opening range low, essentially, okay, right here. And the rebound here even confirms the upside bias. So on the pullback, I was just waiting for this Asia Pac opening range to open. To be honest with you guys, I was hoping to get into a long here against a low ahead of, you know, before passing out yesterday. It's a good thing we didn't, because if we had taken the long outside of a trigger here and put a stop against that low, you probably would have gotten hit right there. So prudence pays, guys. And here's the trigger right now, gave out. Again, this was a trigger that gave out. Eileen, perfect example of a trigger that gave out with no validation in price. So this is not an operative trigger. It doesn't mean that the price is not going to move up. It just means that that's not the right time to take it, okay? Because that break needs to coincide with a clearing of a price level in price action. So that's just one note I want to say on that. Again, if we clear the opening range highs, you're looking for 147.15. Keep in mind it's a wide range scalp, guys, not for the faint of heart. If this strategy is new for you, if you haven't been with me from Daily FX for a couple of months, you might want to stay away from a pair like this, where you're basically risking 60 pips per scalp. For those of you who've been with me for a while, the opportunity is awesome here. Okay, the opportunity is awesome here. Just wait for those triggers and those breaks to pan out. So I'll keep you updated on this one as we go through the session here. Just going to break it right off to the side here so I can remember. All right. And I would be taking a little bit of a long position here, actually, on this break. So if we do take a position on the long, guys, by the way, 46.50, you're looking for about 60 pips, okay? So you can't put your stop against the Asia Pac low. That would essentially give you a 100 pip stop, which is not what we'd be looking to play. Your stop against this would have to be against this swing low here, which is essentially going to be designated as the U.S. opening range low. Okay? So we'll see if that opens up. Also, you want to always, bring it into a 5-minute chart. Let's see what Euro Oz looks like here. Okay, this will take you out of long exposure if that breaks. That might have been a decent trigger right now. Let's bring in the session ranges here, trade sessions. Yeah, it looks pretty good. One other thing that you want to keep in mind on the trade here, guys, as we hold this long here, is this. Momentum, okay? What's been happening on the pullback since the low that you made early in the week in momentum? And even on this low, this was huge, crazy divergence right here. This is a 5-minute chart, obviously. But anyway, here's the pullback, finding support at 40, finding support at 40. A little probe into 40, 60 break, shifting things around. 50 hold, trigger break, keeps the upside bias in play. All right? So I hope that offers some help. And even on the near-term prospect here, let's just see what this looks like. Not bad, not bad. And that stretch to the upside takes into 47.80. Okay, watch 47.15, 47.80, just shy of those highs, but would be a nice subsequent target to the upside. Okay. Now, once we get into 47.15, 47.10 here, guys, you take some off the table. Okay, you shave off a quarter or a half. However, I can't tell you what your risk tolerance should be, but for me on a trade like this, I probably would take off half the trade, bring stops to break even, and then look for that stretch into 47.16. All right. Eileen says, are you waiting for another dip, Euro Oz to enter the long? You can. You probably will get it as there's some back and forth as you head into the U.S. session. I'm a little bit more of a free-hearted spirit, so I jumped the gun a little bit, but I'll be more than happy to add to that position if we head into this region. You find a pullback to get back in on the long side. But remember, this opening range has been intact for 3 sessions. Okay, if we break back below 46.50, guys, doesn't necessarily mean we're bearish, but it does invalidate the long side. Make sure you guys hear that. If it breaks back below 46.50, doesn't necessarily mean you're bearish. It means you're no longer bullish. It means it could break back below this and sit there sideways for another 2 days. I don't know. What would be bearish? Bearish would be a break below the opening range low for Asia Pac, which is the same as the opening range low for Sydney, which is the same as the opening range low for Europe. Make sense, guys? Okay. Eileen says, okay, great to see your decision process anytime. I'm glad this is helping out. Okay, so that is the Euro Oz in a nutshell. Okay, so that was the featured headline scalp here. Dollar yen, I'm not really crazy about it. I'm not really crazy about it with all the other pairs that are on the scalp page, guys, with much larger ranges. Dollar yen is actually pretty decent as far as the range is concerned, but you're in the weekly opening range still, guys, okay? And that's something I noted yesterday. For anyone who's calling for the dollar yen continuation higher, for anyone who's calling for the dollar yen breakdown, that's cool. But from a scalping standpoint, from an intraday trading standpoint, I can't make any assumptions like that until there's something to make me give that assumption. and it really kind of irks me. So if you didn't pick it up in my voice yet. So guys, let's just stay objective as possible. I did tweak a little bit this pitchfork here to take into account the better price action. Seems to have caught these lows pretty nicely. It was actually waiting for a dump into 17, never actually got it. Long story short, the opening range for the week is still intact, guys. And the open for the week was right here, okay, or the close of last week. We gapped, we filled it, but we're still unchanged, essentially. Okay? And why does this matter? Doesn't, except tomorrow's NFPs. Which means once we do clear this play, once we do clear this range, excuse me, if it's on an event risk day like tomorrow, you're likely to get a little bit more of a conviction bias. Keep in mind, you know, on the larger scope, guys, dollar yen it's just been in consolidation, man. There's really nothing other than that I see going on here. So from a scalper standpoint, as long as that opening range is still intact for the week, you're just playing those real short-term stabs. I don't really want to harp necessarily on a bullish and bearish invalidation on this pair until we clear the range for the week. So, you know, on the broader scale, for the zoom out, for those of you who like the scaled view, here's sort of what the scalp looks like. It's getting kind of messy. So we're going to take a little bit more of a neutral stance on here, waiting for a break of the weekly opening range. Questions on dollar yen? So the only thing I will note is that yesterday there was an opportunity, actually, if you guys read the note as soon as I posted it, this is what I was looking at. Eileen, another example of a opening of a trigger break that didn't pan out. So if we look at the report, okay, note divergence into the lows of the pending resistance trigger. At the end of the day, dollar yen is largely held within an initial weekly opening range, and as such, we need to trade it as a range for now. But that divergence into the lows of the trigger break, here's what happened. Price action on a close basis. We're not looking at these spikes, right? So bring it into a line chart if you have to, right? Very, very slight, but lower low, higher low. And again, when these divergent points, the closer to 50 they are, the stronger the signal becomes. So there's reason to think that you could be finding a nice rebound here. But the trigger break didn't really yield much. Now, to be fair, Eileen, if we take this objective as possible and we say, you know what, maybe we got faked out on this break above 1135. It only reached into 1140, but let's say we got that faked out right there. And you took the long. The stop is where? Against the opening range low for that session, right? So your stop would have still been maintained, and you actually would have been in the money, but not by much. So again, another trigger where you know, price action is now validating what you're seeing, not necessarily going to be an operative play. So just wanted to bring that to your attention. And then also, when you lose efficacy like this, guys, it's time to take a step back and reassess the scenario. With dollar yen, with the U.S. event risk on tap tomorrow, I do think you see a big move here. You know, dollar yen is notoriously strong correlation with treasuries, and as such, U.S. data really tends to shake things up on this pair. So we'll see what tomorrow's non-farm payroll print makes. Eileen says, see, that makes sense. Right on, Eileen. Brian says, Jamie had a longer-term pitchfork on the yen. The bounce at 117.02 was right on the ML. Possible support? 117.02. So irrespective, we had a median line right there too, man. Right? So here's that median line off the highs. Literally caught that low to the pip. Yeah, on the daily, he may have another pitchfork. I haven't actually reviewed his chart for the dollar yen, so I'll look at that. At the end of the day, irrespective of what's there, and Brian, that's something I love to hear. When people will throw out a level of, hey, you know, there's support there, and then people come out and say, guys, there's also a pivot there, or hey, there's also a moving average there. That just adds to it, Brian. At the end of the day, it doesn't really matter what the technical feature is there, as long as we know it's there. Right? And at the end of the day, set 1699, 1693 is a 618 confluence of an extension and a retracement. So right off the bat, that's been a region we've been looking at, you know, since last week even, right? Sandeep, I appreciate that. Says nice webinar. I got to bounce. Okay, have a great day, man. Jay says, doesn't the yen, I think you mean consolidation there, on the daily negate the use of RSI price triggers? No, Jay, it doesn't necessarily. It negates. Well, let me take a step back. It depends on what time frame you're looking at, Jay. The RSI price triggers are going to work in ranging markets and trending markets. They will be stronger in trending markets. They will be clearer triggers and typically will pan out much better. But for a ranging market, you want to only pay attention to intraday RSI. Okay, that's the triggers I'm really watching. So for intraday RSI, you're still going to get those 60-40 holds on the way up and on the way down. You're still going to get those trigger breaks, but you need to be much more nimble. Okay, it's the same as trading in a range. So you can still use the RSI triggers for sure, but much more tighter time frames, right? So good question, Jay. Always in all these oscillators, guys, a trending market will always give you stronger signals. That just goes to say that's a flat statement you can make, but it doesn't mean that it invalidates the range market. All right, so that is dollar yen. Moving right along, we have Kiwi yen. Okay. Let's bring that up. Okay. Here's the daily chart. Okay. Sorry about that. So, a trade that's been very clear this week, in my personal opinion. Kiwi yen has been probably one of the best performers. We played the downside aggressively last week on that break to the downside. The scalp chart is going to do its most evidence here, but I just wanted to show you the larger scale picture real quick. The trendline support that dates back to the 2013 low. We had one day close below that. It was also a 7864 retracement, and the lows for it's actually really interesting because it catches the highs from a few years back. It catches the last December high for 2013, catches the low for May, the low for August of last year, the opening range high for October, 764. That trend line, there was so much there. So on a trigger like this, I'll be much more happy to, what's the word? Shift my bias back to the upside. The other thing that you want to keep in mind is that you had a massive outside day reversal on the 3rd. Which took out the weekly low, cleared through the opening range high for the week, and held us back above the 85 level there. So here's what the scalp looks like, long story short. You guys can follow the daily chart. Here's what the 30-minute look like. So clear break of the opening range high for the week, shifted the bias to the upside. A nice wide range scalp here too. You're looking at 38.40 pips per scalp. The first target was 86.70. Second target was here. On the 4th, or on Wednesday, or Tuesday rather, we noted, guys, this thing's at resistance. It's the upper median line parallel. Or is that the median line parallel? And momentum divergence into the highs with the trigger break. Look for that break and we'll look for the shorts. Initial targets were 86.70 right back at you, and again 85.90. So this 85.90 just missed. The thing stalled out right around 86.05. But there was reason to go ahead and dump that position. The first reason was to hold at 40 for hours and hours, okay? And the second reason was the subsequent trigger break to the upside that took you out, okay? So yesterday's notes were to do just that. We said that we missed that bottom, the second level, 85.90, which was also the bullish invalidation level. So a break below this, guys, a break below this actually would have shifted our bias back to the downside, or invalidated the upside at least. Why? Objectively, it's the opening range high for the week, right? And this would have been a clear break of the Asia-Pac opening range to the downside. Well, the Asia-Pac opening range broke to the upside right around 2200. Noted that I didn't take a position because this resistance level was right there. So again, Eileen, a lot of these triggers you want to actually use as when you want to get out of the trade as opposed to getting in. Okay, so this is something that would have cleared me out of the short side of the trade, The break here did not coincide with the necessary break of any major key range in price. So this is something that just takes you out of the shorts, doesn't necessarily put you on the long side. At the end of the day, this is the only reason I'm scared of taking longs from this region is because you're so close to resistance here that I'd rather sort of play the upside break. Remember, another scalp that has a lot of room and another scalp where the broader directional bias is still probably bearish. You know, the weekly opening range opened up to the upside. You had a nice constructive bounce here or a nice triggered momentum that gave you on the long side with a nice risk to reward there. Again, the risk to reward here had us holding shorts earlier in the week. From this region, you want to be careful because the broader bias remains weighted to the downside. And that's why it's always important when we're trading these counter trend trades. You know, this trade right here, this is half position size. Okay, and it looks like you're actually getting a trigger break probably momentarily. That's one way to draw it, but I'd probably be comfortable drawing this. Three tags right there. Yeah, holding shorts against the highs, 87. 40 pip stop, you're looking for 40 pips. So use some caution here, guys. You're going to stretch it out to a 1-to-1 risk to reward, but it does look good. Questions on Kiwi Yen? I knew I moved it. And let's also bring up the 5-minute chart here of Kiwi Yen, see if there's anything interesting on that. Okay, and this is pretty compelling right here, right? Momentum signature struggling to hold 60, struggling to hold 60, struggling to hold 60, right? There is a trigger break here, a little bit looser, but that just gave out. Whoops. Okay, unfortunately, you don't have any opening ranges to play with just yet, but you know, I'd be looking lower from here at this point, heading into U.S. session, even on a basic trend line. Yeah, so at this point it'd be chasing, Eileen. At this point I can't really take the trigger because it's too late. The stop is going to be way above, you know, 50 pip stop from this region. We have only 38 pips per scalp that we're looking for. So that's not an operative trade I can take at this point. If you do see a rebound here, we test again the Tokyo high back into like 86.75 with a trigger break here. Might be another opportunity to jump in, but I'm not really necessarily willing to dive after this one this late in the game. The operative trigger for this one, just for your information, guys, to see if you're asking, hey, could we have gotten an entry on this, probably would have been something like this. That probably would have been the operative entry. And the trend line on the 5-minute would have been this trend line. Does that make sense? Eileen says, yep, missed it, but stop way too wide. Right. Eileen says, makes sense. Cool. All right, so that is Kiwi Yen. Looking lower from here, bottom line, near term. You know, you really need to get above this median line bisector to keep that upside bias in play. Questions? Sterling CAD, we covered early in the session. Gold has been a no play still. There's not really a lot to say on gold. You probably get a deeper pull into 1237. Tomorrow is going to be NFPs, again a big dollar mover, so always going to pay attention to gold. Here's the updated chart from that Tuesday or Wednesday post. You know, it's going to sit here for a while, guys. It's going to sit here and jack everyone back and forth until we get the directional break. You know, I do think you finally see a near-term correction. You're at risk as long as you're below that bisector. And remember, early in the week, we actually cleared out the long bias back last week when we made this move. Okay, the pop back above didn't really see that much light of day before it moved back down. In fact, on that rally that we saw back on the 30th, momentum came right into 60 and held. Right into 60 and held. So right off the bat, you're not looking on the longs anymore. You want to let this thing kind of settle back We'll see if we can reassert a long position down here, or if we get back above the median line bisector and look at that stretch back into 1300. So gold's also on a wait-and-see approach here. I do think this thing just kind of jacks around for a while. Last but not least, on that chart is Aussie CAD, another massive range scalp, guys, a massive range trade in general. You know, the monthly opening range for this is just astronomical already. So what we wanted to note yesterday, this is still on the watch list, guys, if you noticed. You know, both of the gold trade and the Aussie CAD are still on the watch list, but basically we wanted to see if this level holds, and you got a really big rebound off it. So interim resistance 97.40, it's the bearish invalidation level. We flew right through that and even attacked right up into near-term resistance. Okay, so here was that rebound of key support. My favorite setups, I tell you guys this all the time, is 618 off the low, 100 off the high. Those confluence regions tend to be golden. Add to that you had that basic trendline resistance, which is a little messed up here, dating back to the highs you made in September. All right, really gave you a nice conviction hold right there at that support region. So at this point, we did tag that 97.76, which completes a basic 38.2 retracement. You went through the bearish invalidation level. So here's what the intraday chart looks like for Aussie CAD. Okay, so this is the bearish invalidation level that we talked about, 97.76. Actually, we probed right into the upper end of that before this thing cracked, pulled back at 97.30. Did I update you on these guys yesterday? I did not. Oh, I tweeted this. I knew it was somewhere. I'm sorry, guys. One sec. All right, so are there any other questions on pairs you guys want to look at? Stefan, tell me if you're still in the room. I think I saw a question from you on Euro Yen earlier. We could definitely take a look at that. If it's something you're interested in. Aha. Okay, cool. So here, this is what I wanted to show you guys. Here was the chart last night. And we were heading right into this region. So we had that bearish invalidation level just higher. The RSI here is another example, Eileen, of where there was a trigger, but the trigger break yielded nothing. Okay, so you just don't pay attention to it. Not every trigger that we see in price action is going to be operative. So price action comes first, then you look to the trigger to find the conviction. We highlighted this region yesterday as the bearish invalidation level just into 97.92. The high, guys, was 97.93. Okay, you saw that break. When did that happen? Into the open of European markets. So here's your European open, another example of a perfect opening range trade. Okay, bring up the trade sessions indicator. Okay, Here is your London Open, where that green starts. I'm just going to drop a line here real quick, just to show you. Clear this out. Okay, so there's the opening range for Europe. Your opening range low is at 97.65. The opening range high came in right at the top end of the bearish invalidation level at 97.93. So this is the range you're looking for. A downside break below 97.65 puts you short against 97.93 for 30 pips. You're looking for a 30 pip gain. Downside move takes you from 65 right into 32. Okay, so you're only looking about 35 pips. So right on point. Pretty tight, but right on point. I do think you probably see another turnover here, probably another rally to sell. A bottom line, break below 97.30, guys, and you're looking for a run. I wouldn't necessarily look all the way into 96.60. In between here, well, from this point, it's prudent to take a basic retracement of that advance. Oops. You're looking for the 50%. Okay, 96.90. That's the level I want to highlight. So that's the intermediate level I'd look at right before the major key support at 96.60, which is again highlighted on the daily chart. It's the 618 100 overlap. All right, so that's the view here for Aussie CAD. At least the European opening range did break to the outside, so you're looking for a late European low. You're putting in that low now. We'll see if that 97.30 breaks, but if it does, you look for a breakdown, another 40 pips into that 96.90 region. But another trade, guys, where if you look at it objectively, aside from all the trend lines and all the fibs objectively, Sunday open, Sunday high, Sunday low is put in, you broke that low, you checked it as resistance, opening range remains bearish. You come back to check the underbelly of the opening range, failure, trigger, break. All right? And remember, for the triggers, guys, yes, we would like to use the low in price, but if there's something like this where you still have, you know, a 3-tag combo, or as long as you can validate 3 tags of the oscillator, you can warrant it as a possible trigger. So something like this, for example, would have been acceptable for me, right? Whether you want to call that 1 or 2 tags, that's, you know, your perspective, but that's 1 tag, 2 tags, 3 tags. Operative trigger. Okay, operative trigger. Guys, does that help? So there is a lot of opportunities on these pairs that are just kind of moving. Again, the obscurity of the times for U.S. traders, guys in Europe, you know, enjoy it, guys. You guys got the cream of the crop. You know, 70% of all the scalps I've published on SV have actually been panning out exquisitely during whether it's late Asia or early Europe. Frustrating for me, but there is seems to be a lot of action during those times. Okay, so I got a question from Brian. He said, yeah, Brian, or yeah, Euro Yen would be good. Thanks. Jamie, I think you meant to say, I was looking at it yesterday. So sure, here's what Euro Yen, I haven't taken a look at it recently, so bear with me, guys. Do some on-the-fly analysis here for you. And we will see. Yeah, so I'm not really a big fan of this pair, actually, because recently, near term, you guys know, kind of been looking down on dollar yen, which is yen strength, and at the same time we were looking for the euro rally. That's euro strength. That's why I think you're seeing a lot of this. To start off the month, to be quite frank with you, this was my personal bearish invalidation level. So if this thing had broken back above 34.50, I was very inclined to actually play the long side of it. Not necessarily because of the median line per se, but more so because of that stack of fibs. You got the October low, which was actually the stretch low for 2014. You had a 2618 off the high. You had a 100% extension from last year's range alone. A lot here. So the fact that we broke right through, then came right off, still has me very wary of long exposure below this region, right? And if dollar yen does put in another low, that's yen strength still might cap the upside. So long story short, Brian, for me, from a scalp prospect, I think you're better off playing this from a swing prospect. From a scalp prospect, it's just it's not on my radar. And in fact, if you look at the I don't know why it's on this. I'm sorry. Daily chart is actually pretty healthy with 216 pips. So it becomes a higher risk scalp. Let's see what the near-term chart looks like for euro yen. Okay, here's your weekly opening range. Nah. I don't like it. I don't like it. This is what I'll tell you, Brian. For me, I would have interpreted this as the opening range break for the week, okay, which would have given me an upside bias. This break back below that region invalidates the long side. Doesn't make you bearish, but invalidates the long side. Now we're back above it again. We haven't cleared that 34.50 region. Listen, I do think it goes higher. I do think you see a correction. I don't trade on what I think. I trade on what I see. And for me, from a scalping standpoint, I don't feel comfortable taking the long side unless you get back above that 35.50 region, plain and simple. There's a lot of room here to get chopped. And for me, Brian, when I'm looking to take a scalp, man, if it's a healthy range scalp like this, if you're looking for 50, 60 pips on the range, like we are with Sterling CAD, like we are with some of the other crosses that we looked at today, that's a trade that I only take when there's conviction. If this was a quarterly daily ATR of 20 pips, 25 pips, Bri, it's worth a shot. You know what I'm saying? Look for the momentum triggers to the upside and try to take the longs. But for me, with a wide range scalp like this, I'm not trying to risk 55 pips just because I think it's going to break higher. I'd really need to see the setup give us a little bit more of a conviction trade. This would have been a decent operative trigger, believe it or not, just because of the break above 40, then the rebound off 40 with a trigger break. A rebound off 40 with a trigger break, guys, is, to me, almost as strong as divergence into the lows of the trigger break. And you guys know that's going to be always your best shot, whether it's a 5-minute chart, whether it's a 30-minute chart. A divergent signal into lows followed by trigger break is typically going to be, a beautiful entry. So this didn't give you divergence, but a rebound right after oversold territory, a rebound right off 40 in a break, that actually is a decent trigger break to the upside. That being said, like I said, until we clear 34.50, man, I'm just going to sit tight on this one. Brian, did that help? I wish I could give you a little bit more of a conviction trade, but that's just how I see it right now. If we take a basic retracement, these are the levels that you'd want to take into account if you are playing the upside of this. I don't believe all the hype that we're necessarily going to see every euro cross just completely go to hell. If you guys were around yesterday, I did hear about what happened, with the ECB saying they're not going to be accepting Greek debt as collateral. Yeah, if that was the end-all story, guys, and that was going to swipe, I know that the scalps or the swing trades got stung on the exit there, literally almost to the pip with that pullback in overnight, or that pullback yesterday, rather. Literally almost to the pip, we got stopped out. Long story short, here we are, guys. Here we are. Don't succumb to the noise, okay? Because if you do, it's going to hurt. It's going to hurt. oh my God, the ECB is not taking Greek debt. Sell the euro. Look for 110. Right? Those guys. Yeah. Where are they now? Where are they now? You hear them. You hear them shut up real quick. Right? So I'm not hating. I'm just saying, let's keep our focus on what's going on in price. Forget the noise. Yeah, we have to be mindful of these major economic releases and dates and when they're coming out, but that's not what we're trading. We're not trading the news. We're not trading the release. We're trading price action. So that's what we're going to keep focused on. Long story short, you still preserved and didn't even go through the opening range low. So right off the bat, yeah, you might have gotten invalidated on the long side. But right off the bat, there was nothing for me to take a short on that. And anyone who took a short on this trade, guys, a short on euro yen, anyone who took a short on any of this based on yesterday's developments, you won't hear them talking on Twitter today. Okay? So let's just be as objective as we can on this, guys, and let's just not get stung doing stupid stuff like that. It really, it's a shame. It's a shame for people who keep hearing these news and then they kind of follow the news and they're running after it, and there's no need to. There's no need to. Largely for me, again, if we get above 34.50 here on a closed basis, sure, I'll play the long side of this. I think you do get a decent correction. If we are just to figure some topside targets, 37.60 obviously is going to be a basic 38.2, and that weekly high we made to start off the month. It's also going to be the start off the week. This was back on the 20th. That's going to be the initial topside target, but ahead of that, I do want to see if we have any extensions that run into that region. Here's the low. Yo. Here's the low. Ooh, ooh, wee. Look at this, guys. 618 comes dead on with that 236. Loving it. Loving it. All right. So on the top side play, guys, if we are going to get involved in this trade, these are sort of the levels I'd be looking at. 100% extension from the advanced off low takes at 36.30. Okay, even if you wait for the break above the highs for the week, 35.20, that's 100 pips. Okay, you're only looking for 50. Beyond that, obviously, a 38.2 and that weekly high at 37.60, and then you'd basically be looking just shy of the 39 handle. Let me just remind myself what this extension is. Right. Right. So I'm actually not going to stress this 50. I'm going to highlight this region here. Why? Am I just ignoring the 50? No. But, again, nothing supersedes price action. Nothing supersedes price action. So, yeah, the 50 is right here, but guess what? This 1618, 618 combo actually covers a little bit more of a key pivot in price. I'll bring your attention to the lows that we spiked right here before the break. I'll bring your attention to the recovery on the rally. Rallied right into this region before it turned around, right? If we look back in price action way back here, just put your cursor right slap in the middle of that range. Resistance, break, support, break, resistance, resistance. I'm going to pay attention to this region, all right? So sometimes you have to, I don't want to say pick and choose your fibs, but sometimes you want to make sure that you're keeping in mind what you're respecting, which ones are going to be more critical. There's nothing magical about Fibonacci. We're not just going to run after Fibonacci levels. The Fibonacci levels need to make sense with what we're seeing in price. So long story short, Brian, I hope this helps, man. I mean, I do think you get a little bit more of a recovery from a scalp standpoint. It's too rich for my blood right now. If we were in the middle of the trend, or if we had a confirmed reversal, 54 pips, that's going to be right up there with my favorite setups. But as we turn here, very, very cautious to try calling turns. In fact, I think if you get a rally, you're probably better off waiting for that rally to get back on the short end here. That being said, those levels I'll be looking at break below the weekly opening range low, which is basically the 32 handle, invalidates this idea completely. In such a scenario, you'd be looking for that breakdown to continue in euro yen. Brian, does that help? Brian says, okay, thanks. Just trying to look at your process into scalp into a longer-term position. And guys, that's great. You know, scalping intraday is not necessarily for everyone, but guys, it's always going to offer a very strong reference to what you're seeing in the broader picture. So even guys who aren't necessarily scalping this on a day-to-day basis with us, you know, they find that these levels can very oftentimes give them reference to what we're seeing from the larger scale, giving them reference to what we're seeing in price. So something to keep in mind. Brian says, yeah, thanks. That's what makes you guys a great combo. Perfect! Exclamation point. Love the enthusiasm, Brian. And we think so too. We think so too. We think we have very good synergy, me and Jamie, and our analysis both on the long term and scalping terms tend to fit together like a puzzle piece very well, right? So I'm glad you guys are seeing that too. Well, I'm over on time. If you guys have any specific questions, do let me know. I will keep it open for a couple more minutes to answer any questions you might have. Again, we'll open the room tomorrow a little bit earlier. We'll try to get it up and running, guys. I don't know, 8:20, 8:15 before the release to see what that offers. Listen, sometimes NFP is a dud. Sometimes it's the biggest market mover of the week, of the month. So certainly we don't want to come in with any expectations. We'll let the print come out. We'll let the dust settle. We'll see what the reaction is. But we'll give that a gander tomorrow morning. Looking at the dollar crosses, the only thing I really want to bring attention is this, guys. You guys remember this chart? You guys remember this old lonely guy? This is the dollar index, Dow Jones FXCM dollar index. We highlighted this region earlier in the month. As we came into the upper median line parallel, this parallel dates back to the lows that you made in 2011. All right. The upper median line parallel catching that advance almost to the pip. Look what the median line did. Caught that rally, and the 2014 swing high for September. Also, you have the 2009 swing high, which is 11,845. That's not even a fib. That's just a high. And then on top of that, you have the channel resistance, basic channel resistance. So as we came into the month, this was the focus. This will remain the focus. I guess we can drop our monthly marker at this point. And what can we say? The monthly range is still Tuesdays for a trade session. Okay? So you need to see a break below 11,754, which would actually clear channel support. Or you need to see a break above the opening range high for the month, which is 11,088, and that would likely clear the upper median line parallel. Now, if this breaks, guys, it's not going to be your old dribble rally. It's likely to be something like this. It's likely to be something like this. It's likely to be something like this, okay, just because of what's stacked up there. If you get the downside correction, you're not looking too crazy yet. You're basically looking for a move into the yearly low, which is going to coincide with the basic trendline support from August. That coincides right here next week, around 11,056. Now, I know it's a way far away where we are now, guys. I'm not saying the dollar is going to fall apart, but certainly those are the levels we'll be paying attention to near term. As far as the retracement is concerned, you can try to redraw the retracement, guys, but it's going to be the exact inverse because the highs are almost identical. So if we take retracement off the low, it's going to be the same retracements in opposite order. We'll continue to work with these levels for now. So this is the focus heading into NFPs tomorrow. Hopefully, that'll charge a break of this region. If we take a quick walk through the majors, we talked about the Aussie dollar. Watch 78.25, guys. Watch that break. Sandeep, I'm with you. 79.50 is an area. 79.45 is an area I'll be looking for with great interest as resistance. Pound dollar, there's that resistance range, guys. Looks like it's going to hold for now. I do think inevitably you do break through this short term heading into the U.S. Open. Watch the upside is at risk sub 53.20. Looking at the dollar CAD, haven't really made any plays. In fact, the scalp chart for dollar CAD's been naked for months. I don't like to necessarily play ranges that are so extended, especially when the ATR is a little bit tighter. The ATR has just started to open up, but typically and historically the ATR for dollar CAD is rather tight. So I haven't really had any plays here. We'll drop the monthly marker here as well. So dollar CAD on a pullback story for the dollar. I'll be very interested here on possibly playing the short side for dollar CAD. I do think you see a little bit of a correction. 70 break earlier in the month kind of turned this bearish, but we haven't really gotten that multi-month trigger yet. So we'll see if that gives out. So that is the sterling Oz. Dollar yen we talked about. Dollar Swiss I don't trade. Kiwi dollar we haven't talked about. Let's take a quick look at what that one's doing on the daily. Okay, and again, a very strong downtrend on this pair. The recovery, in order to play the recovery or to take a stance on the upside for the Kiwi dollar, I would need to get back above 74.69, this region here. You got the monthly pivot. It's a clear pivot in price. It's a 2012 stretch low. and certainly it'll clear these trendline supports, these slope lines, to give us a little bit more of a conviction breakout type of move there. Still heavily bearish, guys. So that's what would invalidate the bearish side, meaning that said, you're bearish sub 74.60, 74.70. All right. So those are all the dollar crosses, guys, for the majors. We'll take another look at these tomorrow in near-term price action as we go through the release. Happy trading, guys. Best of luck, and we will see you all tomorrow morning. Eileen says, thanks for the class. So valuable as always. Good thoughts for you to stay clear of your headaches. Yeah, I appreciate that, Eileen. Bless you. Says, Permendra says, thank you, Michael. Take care. Have rest because of you. We are here. Thank you. I appreciate that, guys. I'm humbled by your comments. Brian saying, good luck with the headaches. I know Exert is a good med that works well. Exert, huh? Yeah, it's for clusters, Brian. I'll look into it. I'm open to all options, guys. I've been suffering from this for about 5 years now, so any and all suggestions are welcome. I'll end it here. Guys, have a great day trading. I'll see you tomorrow morning for NFPs bright and early at 8:15. Cheers.